Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. I am your host, Matt Sands, and I'm here to help you make the most of your minerals and royalties. And Justin Williams joins me. Hey, Justin.
Hey, Matt. Thanks for having me.
Thanks for being on the show. And we're here to go over the news for mineral rights owners for April of 2020. And we're recording this on April 7th. And just a reminder, things are changing very rapidly. Some of these articles, I think, are very relevant still, but just as you know, things changing on a daily basis. So we'll try to make it relevant and provide some insight into kind of the generic terms of what it means given our current environment and everything going on. First of all, I hope everybody listening is well, your families are well and healthy. Certainly unprecedented times that we're living in right now, being in lockdown and stuck at home and stuff like that. So it's definitely an adjustment. I know my kids are just starting their remote learning for school for the remainder of the year, which is an adjustment. And with everybody together at home, I guess the upside of it, the thing that I'm appreciating in these circumstances is being able to spend a little bit more time with the immediate family. And it seems like the pace of life is slowing down a little bit. It's interesting looking out and seeing people outdoors, walking down the street, people still social distancing, but the less traffic, and so a lot more people out walking, down the middle of a street, which before they wouldn't have dared to do it if you're getting run over by a car. So that's I think kind of cool. I don't know, Justin, what are you seeing in Colorado Springs?
I'm seeing exactly the same. People are getting out, enjoying nature more, and definitely the pace of life slow down. I think, this is making everyone kind of look in the rearview mirror and question, what really matters to us, which maybe isn't a bad thing, but I think we all hope to be through this soon enough.
Definitely hope that it's over sooner than later. Certainly the economic impacts are pretty staggering. I know getting people back to work will be good, and we got to do it in the right way so that everybody stays healthy. But hopefully this is something we can take away from all of this, is that kind of slower pace of life. At least people living in the bigger cities and used to the hustle and bustle. But in any case, what do you say we just go ahead and dive into the first article for this month?
Let's do it. And the first article we have here is not that wonderful of a headline, but oil and gas industry faces huge loss. So with oil prices plummeting to their lowest level in 22 years, state legislators are projecting an imminent budget crisis that's likely to force New Mexico legislature into special session. Senator John Arthur Smith, chairman of the Legislative Finance Committee, said the state could be facing a $1 billion loss in oil and gas-related revenue if the crisis continues through this year and into 2021. She said a special session could be called and would likely focus on adjusting proposed spending levels for the budget this year that starts in July, addressing public health needs, and crafting an economic relief package for workers and businesses in New Mexico communities. The article goes on to talk a little bit about during the 30-day session that ended last month, legislators based a $7.6 billion budget plan for 2021 on oil averaging around $50 a barrel. But for every $1 in price drop, the state loses an average about $22 million in direct oil and gas revenue over a year. And this is a huge loss for New Mexico. The damage from the crisis will be greater and last longer than the last industry downturn in 2014 to 2016. Fine told the Journal, the production in the Permian Basin will have to decline by at least 600,000 to 700,000 barrels of oil per day or more before the situation gets any better. I think this kind of fits into the narrative that we've been hearing, Matt, but never a good thing to hear.
Yeah, it's definitely part of that overall narrative. A lot of the headlines have been focused on the health of oil and gas operators, but I think this is one of the additional knock-on effects that we're going to start hearing more about is within the larger oil producing states that they're going to be faced with some serious budget constraints given the drop in the price of oil. So this is relevant to not only New Mexico, but obviously really any state that's taking any significant tax revenue from oil and gas production. Texas obviously comes to mind, Oklahoma, Colorado, Wyoming, North Dakota, really any other state, like I said, is going to be faced with some serious decisions. And, in the meantime, we've got this pressure on the state to provide additional healthcare spending with the coronavirus pandemic going on. And so it's a real kind of catch 22 situation we're faced with. Hopefully, on the bright side, it'll cause, everybody to become a little more efficient. So providing the necessary services for the residents of that state, but maybe we can do it in a little more cost efficient manner. And so it's definitely going to cause state legislators to have to sharpen their pencils and try to figure out a way to make it work. And now, hopefully, this is a short lived thing. I think, since the article was published in, I think it was the end of March, the price of oil has come up slightly. So, assuming we can get some sort of agreement from the major oil producing countries to, with respect to the supply cuts, then that'll help lessen the impact. I think it's going to really require the U.S. to step up to the plate and provide some assurance into the Saudis and the Russians and others around how we're going to manage this situation and what kind of cuts we're willing to take. That's going to be tricky because we're used to this free market economy that we love, being in the U.S., but it comes maybe at a price here within the oil and gas industry. So definitely an interesting and developing situation related to spending on the state level. I heard a statistic for Colorado, drop in the price of oil that we saw in the beginning of March, and with the stay-at-home order that was issued for Colorado and the loss of revenue for restaurants, and it was talking something on the order of like $1 billion per month. But the gist of the discussion was that we're seeing, because of the amount that oil prices dropped, we were seeing about an 800 or $900 million hit in terms of revenue from oil and gas production. And that's to, service providers and kind of the second order stuff, everybody that supports the industry, whether it's in catering or trucking or whatever. And so you think about, something we're very familiar with, walking down the street, seeing all the restaurants closed, and the financial impact, not only on the small businesses, but just as a whole from that closures. And then just the price of oil dropping 50% has had a similar effect, at least in Colorado. And so I think that's something to take away when you look at, whether it's Colorado, New Mexico, or whatever state, is just the price of oil being depressed is going to have a significant knock-on effect from oil and gas companies' spending level. Not only that, in addition to the decreased tax revenue that they'll be getting. So let's dive into the next story now. And this is a bit of a brighter story, which is good. And the headline is: the U.S. is becoming the world's largest oil and natural gas exporter. And this was written after the drop in the price of oil, and with the COVID-19 coronavirus pandemic developing at the end of March. But this is the one that I wanted to cover just as a positive take on all of this. And the article says, we are slated to become the largest oil and the largest liquefied natural gas exporter in just a few years. The federal numbers are out, and the U.S. oil and natural gas exports boomed once again last year to record heights. In fact, last year, the U.S. posts the first month in 70 years as a net petroleum exporter. And it goes on to talk about LNG, liquefied natural gas specifically, which, like we talked about in our bonus episode, that one of the silver linings to this whole drop in the price of oil and reduction in oil activity is that there's less associated natural gas that's going to be produced, and that's going to help boost gas prices slightly. And obviously, the numbers mentioned in this specific article are changing on a daily basis in terms of production cuts and demand cuts. But the gist of the article, I think, is still valid and still relevant. And even though we're going to see a hit to demand, both in the US and globally, both for oil and natural gas. In the long term, that you should remain very bullish on US liquefied natural gas, as the demand was projected before all of this to be on about a 4 to 7% rise for several decades, according to this article. It's very likely that that number will come down, but will be something that there is going to be a increased demand over time for natural gas exports. And so, one of the positive outcomes of all of this is if natural gas prices are remain stable, there may be some opportunity still in the LNG market, especially as developing countries are using more gas. So I think somewhat of a positive story that we can highlight in the midst of all the stuff going on right now. So definitely check it out. Justin, you want to cover the last article?
Let's do it. So our last article here is kind of a breath of fresh air, I suppose. It's not Armageddon for America's oil and gas industry is the title of the article here. March 10th was a brutal day for America's oil and gas industry. Crude oil prices fell to the lowest level since 2014, dipping as low as $30 a barrel, while the market values of many exploration and production companies, large and small, tanked by 20 to 50%. The meltdown was because of uncertainty. It was also because of the price war between Saudi Arabia and Russia, but other factors are at play as well. The article mentions that oil prices have been falling because of an excess of supply and slowing global economic growth, efficiency in energy use, and the growth of renewable energy around the world. So does this mean that it's Armageddon for the fossil fuel industry, or will this just be a correction that we'll see it come back like it has in the past? The article goes on to talk a little bit about Russia's intention to try to put down American oil and gas, and Saudi Arabia as well, who's able to live with a very low price per barrel, maybe $30 for an extended period. With the depreciation of the ruble, that'll also make Russian oil cheaper than Saudi Arabian oil, and will go on to try to shut down the American shell and throw it overboard, as the article mentions here. One of the upsides to this, the International Energy Agency sees oil consumption falling by about 2 million barrels per day this year because of economic slowdown and maybe a global recession resulting from the coronavirus pandemic. But as the economy recovers, helped by monetary and fiscal stimulus from around the world, the demand for energy will resume its upwards course. The U.S. Energy Information Administration recently forecasted that the world energy consumption will grow nearly 50% by the year 2050, at which time the oil and natural gas will still account for 56% of the total. Demand for natural gas is projected to double by 2050 as gas continues to replace coal in power generation, as Matt kind of mentioned in the last story. In short, fossil fuels aren't going away anytime soon. So, one of the things that, as many times has happened before, the industry may hurt a little bit over this next year, but sure that we'll see the oil industry come back stronger than ever at some point once the supply and demand is kind of under control. The article also goes on to talk about how companies will continue to invest during the down cycle, especially those companies with long-term drilling projects. So interesting to see, Matt, and a little bit of hope coming out here. But I have to agree, this has happened before in some way or another, and the oil and gas industry will come back stronger than ever at some point.
Yeah, I hope the author is right. Obviously, this is an opinion piece. It does have some interesting statistics. I think the demand hit is going to be a lot more significant than what the author mentions. But that said, what we're going to see is companies are going to get even more leaner, more efficient, as they were forced to do in that latest down cycle in 2015. And so, certainly there's going to be a slew of bankruptcies. We have some debt maturities coming up that are really unfortunately timed with the drop in price of oil and gas. But what's going to happen is again, like we always harp on, companies with the strong balance sheets and those that are going to make some significant cuts to live within cash flow and to make their required debt payments. And once all this shakes out, there'll be a lot fewer companies remaining. I think you're going to see a fraction of that once this all is said and done. But like the article mentions, and I do agree with the sentiment, is that we'll see companies come out of this and thrive. And so there will still be an oil and gas industry in the U.S., despite Russia and Saudi's perhaps desire to put the entire industry out of business here so they can have a stranglehold on it. I think we have enough diversity in the industry. There's enough, major integrated oil and gas companies that will see this as an opportunity to invest in some of their more profitable business units during the down cycle, and we'll be able to weather the storm. And then again, like I said, those that have cash on hand and that can, at least break even at $30 per barrel, then they're going to just weather the storm and come out even stronger at the end. So definitely a bright side to the whole situation that we're faced with. I think definitely going to be some difficult times ahead in the industry. We've done it before. We've come out on the other side stronger. And I think just like Justin mentioned, I think this is going to be the case here in this current situation. Now, whether or not it's going to be a V-shaped recovery and things just bounce back super quickly, that's going to remain to be seen. I think we're in completely uncharted territories. We're entering into a recession that's really sort of artificial in nature, that's been caused by the government's shutting down commerce, to help stop the spread of the coronavirus. And so not really something that we've seen in the past, where we've kind of shut off the spigot, and when we go to turn it on, how quickly is it going to come back? We'll have to wait and see. But when it does come back, I think like I said, we'll be stronger for it.
Absolutely. Well, we all hope to see that consumer confidence is up after this. But like you say, it's so unprecedented. And I think we all just have a lot of questions on how this is going to go once it is all over.
I agree. Yeah. And if you do have any questions about your minerals and royalties, anything you'd like help with, anything we can help answer in terms of questions or just advice, happy to help. Just send us an email at feedback@mineralrightspodcast.com. As always, we'll have links to these articles in the show notes on our website, mineralrightspodcast.com. And, thank you again for listening. I appreciate everyone, and definitely subscribe and leave us a rating and review on whatever podcast player you're listening to this on, and it will help us reach everyone that needs to hear it. Thanks again.
Thanks, Matt.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.